Call me crazy if you guys want to, but I think the markets are going to rally hard next week, specifically after the Fed meeting on Thursday, March 16th at 2 p.m. Now, of course, I would not make this video without providing you guys a very deep understanding to why I am thinking this and why I am saying this. So I hope you guys find value out of that. The only reason that I'm really making this video is because the put to call ratio is almost at all-time highs, and in other words, that means there's much more puts on the market rather than calls on the markets, which I'm not your financial advisor. I'm just some guy that lets you know his opinion on AMC and the broad market. So take it with a grain of salt. Anything can happen, but hopefully this video does save some of you guys some money. Other than that, I want to go over something that is going to be sparking some fear in the market's minds after the Fed meeting that I don't think is priced in at all. So hopefully you guys find some value out of this video. If you do, hit the like button and subscribe to the channel. Also, get yourself free stock with Webull, Moomoo, and Public. Right now, when you sign up for Moomoo and deposit $1, you will get 3 free stocks randomly valued in between $5 and $3,500, and you will also get a guaranteed free share of NEO upon doing that. So check it out if you guys have not already. It's free money. I like to give you guys free money, or at least lead you in the right direction. Now, let's get straight into exactly what is going on and why I think it's pretty straightforward and almost obvious that the markets are going to rally next week, Thursday, during the FOMC meeting, right? Now, it all comes down to Fed rate hike expectations. And one of the best ways to monitor this is investing.com/Fed rate monitor tool. So if we look at March 16th, and that's the meeting that I'm talking about. 4 days, 19 hours, 39 minutes away. And about 96.9% of market participants expect that 0.25% rate hike. Now, if we go to... it won't exit out. If we go to May, another 0.25% rate hike is expected. If we go to June, another 0.25% rate hike is expected. If we go to July, another 0.25% rate hike is expected. But you start to get a little bit of a variation here. 14.2% of investors expect there to be no rate hike by July 27th. And then especially once you start to get out further, you start to see more varying expectations. But still, even out until September, market participants, 61.5% of them are expecting a rate hike every single Fed meeting. Even down to November is where it switches around a little bit. So they expect 1, 2, 3, 4, 5 rate hikes back to back. And then in November, we expect to see a relaxation. We don't expect to see another 0.25% rate hike. As far as right now, only 38.2% of investors do, and 44.5% of investors expect rates to stay flat by this November meeting. Now, why is this important? Well, because the markets are pricing in a lot of back-to-back rate hikes. And what do we know about the Fed? Fed Jerome Powell, during his Senate testimonies, in the last week, the last 2 of them, he essentially said, yes, we are going to raise rates in March, and then we are going to watch the data and see what it says. Why are they saying this? Well, because when it comes down to inflation, the Fed said very clearly during those testimonies that the Fed controls demand. When you raise interest rates, you slow down demand. But if we're seeing inflation that is not really due to an excess of demand, like Russia invading Ukraine and the price of oil going through the roof, the price of wheat, corn, sunflower oil, other food commodities going through the roof, the Fed has no control over that. It's not a demand problem. It's really a supply and global market problem. So the Fed is not going to hawk down on demand when it's not a demand problem. And I think he's going to have to articulate that right on Thursday, which who knows, I'm sure he will, but things can get a little misconstrued. But I think by and large what the Fed is going to say is, hey, we're raising rates this meeting, March 16th, but we're not going to set anything definitively. He's going to say we might not raise rates for a while, or we could continue on our rate hike trajectory. And that is really going to give markets a bit of a relaxation pill. They're going to say, hey, the Fed is being calculated here. They're not going to jack up interest rates on us super fast because of what is going on around the world. And I think the Fed is going to highlight that enough for investors to price in, hey, we are going to see rate hikes into the future, but we're not going to Paul Volcker you. We're not going to raise rates over and over and over and over again, because also I think the Fed is going to clearly portray to the markets that where Russia is currently at, potentially defaulting on their debt as soon as April 15th, that they don't know what kind of contagion that is going to have for the markets. They don't know what that is going to do for China, which is very interconnected with Russia. They have a bunch of partnerships. They're even cutting the dollar out and doing their trade within the Russian ruble and the Chinese yuan. So you got that going on. You got Europe and Russia that are very interconnected. And then America, we're not really directly connected to Russia too much, maybe $100 billion of direct exposure, but we are connected to the world. We have our hands in everything. Even Goldman Sachs is selling Russian debt, which is going to go to zero, to hedge funds. So this is going to spread into everything. And I think the markets are going to take probably a couple weeks to fully realize what kind of problem this is going to be. But I think the Fed is fully aware of the credit crisis that is to come. The last thing he wants to do is kill all demand, and investors across the world, governments are going bankrupt, literally defaulting on debt, Russia going bankrupt. The last thing he's going to do is kill all of the demand and send us into a deep recession. So I think that's why it's pretty obvious to me the markets are actually going to rally off of this, because you've seen a lot of stocks even today, like AMC, SoFi, Affirm, other stocks that are hard hit by interest rate hikes, sold off very hard. Just very hard across the board. Like I said, like almost 8% for AMC, SoFi over 10%, Affirm over 10%, even Square down 5%, PayPal down substantially as well. Lots of stocks, just everything that would be prone to rate hike increases or that hurting their business sold off quite dramatically. So once those expectations go away, which I think they will after this Thursday, you're going to see the markets rally. And it's a bit of a silver line here, because I think the Fed's going to stress that, hey, this Russia situation could cause stress to the global markets. And that's really what is going to take main centerfold after this Fed meeting, is going to be what kind of exposure do we have to Russia? Does Russia default on their debt? Do you know what kind of fear the markets had when Evergrande was going to default on its debt? Imagine a whole country like Russia defaulting on their debt, last seen in 1998. Imagine that. The markets are going to freak out, and we're already going to probably come down because of that, and that also helps inflation as well. So I think the Fed knows all of this, and I do think you will see a bullish rally next week, but you will start to see more pain throughout the next coming weeks, especially once Russia does default on their debt. Like I said, as soon as April 15th, but it could be after that. It could be the next bond payments. They might have enough money to pay these payments. Maybe they don't. Maybe they just go, hey, we're just going to default. Screw you guys. You sanctioned us. We're not going to do that. We're not even going to pay you guys. So who knows on that aspect, but I do think it's very obvious the Fed is not going to be as hawkish as the markets are anticipating. So that is going to be all for this video. If you guys found value out of this video, or if you have questions, let me know down below in the comment section. Like the video, subscribe to the channel, all of that good stuff. Get yourself free stocks, links down below in the description for Webull, Moomoo, and Public. And if you guys want to join the trading community, link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.